Bitcoin has been in a bit of a holding pattern in recent weeks. The cryptocurrency stuck hovering around the 80,000 mark. Investors had been hoping that the White House's crypto summit could maybe spark a rally, but now they're looking for what the next catalyst might be. For more, we're bringing in Robbie Mitchnick, global head of digital assets at BlackRock, which of course has the biggest ETF that is pegged to Bitcoin. Robbie, it's good to see you, first of all. I guess, first of all, if you can help us set the scene by explaining perhaps why Bitcoin has not done better, right? There were so many hopes pinned on this White House, the big vibe shift, deregulation, and we have seen some actual concrete moves in that direction, but we haven't seen price follow. Why not?
Sure. Well, I think it's important to take some time perspective on it, right? Which is Bitcoin is still up, let's call it 15% or so since the beginning of November, right? So you saw a pretty extraordinary rally, right into the end of 2024. You've seen Bitcoin, the crypto market, give some of that back. I think that there were maybe accelerated, perhaps premature expectations of just how quickly some of these catalysts would start to arrive. Our focus now, as we look at what's unfold in 2025, is more about the pace of institutional and wealth advisory adoption, which has showed, frankly, a lot of momentum coming into 2025, and that hasn't really abated even in this price environment.
So I'm interested, given that, what do Bitcoin ETF flows look like? What have they looked like? What do you expect ahead?
Yeah, well, obviously 2024 was pretty incredible, pretty historic on that front. 2025 to start has been more negative. We've seen some outflows in the category, relatively modest in the context of the overall asset base, which is close to 100 billion, just over a year into their existence. A lot of that outflow that we've seen so far seems to be a little bit of hedge fund unwinding of the spot futures arbitrage trade, and less so in sort of the more long buy and hold directional investors that make up the fund. So you've seen the yields that hedge funds were clipping in that trade, go from double digits to low single digits, and that's, I think, a lot of what's driven some of the outflows we've seen.
Robbie, as you know, there are a lot of different reasons that people buy and hold Bitcoin. But as you also know, it's frequently referred to as digital gold, right? A store of value. Here we are in a period of time where people are feeling nervous about the economy, and it's not performing like gold. Gold is performing like gold. People are buying gold, but they're not buying Bitcoin. Can you help explain what's going on there?
Yeah, I think it's a fascinating thing, Julie. What we've seen is, if you look at Bitcoin fundamentally on a long-term basis, it really seems like an asset that should be uncorrelated or even inversely correlated against certain risk factors that exist, right? But there are periods where it does have these short-term correlation spikes. And what's interesting is some of what we've seen lately seems to be self-fulfilling and actually a self-inflicted wound by some of the research and commentary that the industry does, leaning into this idea of it as a risk-on asset at times, which really doesn't make a lot of fundamental sense. When you think about what it is, it's a global, scarce, non-sovereign, decentralized asset. It exists outside of any one country's economic, political, or monetary system. And so that fundamentally, we think, is what the long term is. That's why people think of it like digital gold. But you see this short-term trading correlation, and it can be a little bit self-fulfilling, at least in the short term, where before people would focus on, okay, well, higher rates, that's going to hurt Bitcoin the same way it hurts, equities. That makes some fundamental sense. But now it's been extrapolated to things that don't really make any sense at all. Tariffs, it's not clear that tariffs are any fundamental bad for Bitcoin. Economic fears. I don't know if we have a recession or not, but a recession would be a big catalyst for Bitcoin. And certainly the way the market seems to be commenting on it doesn't reflect that.
Well, unless if people have less money, they have less money to buy Bitcoin, right? Or if there's the wealth effect of people having less money in the market in stocks, they have less money to buy Bitcoin.
Sure, and that's part of it on a short-term basis, but ultimately why I make that comment is Bitcoin is long liquidity in the system, right? It's catalyzed by more fiscal spending and debt and deficit accumulation. That happens in a recession. It's catalyzed by lower interest rates and monetary stimulus. That tends to happen in a recession. And it's catalyzed to some extent over just fears of general social disorder, right? And that, too, unfortunately, is something that can come up in a recession. So the market has almost, it seems, gotten this in some ways, not particularly well calibrated, but that's where the opportunity comes in for education in a market and an asset class that's still very nascent, right? And so we've been doing a lot of that in terms of education around our clients, helping them see through some of these conflicting narratives that seem to be out there.
Speaking of education, educate me on this, Robbie. So, eager to hear your take. Trump authorizes this strategic Bitcoin reserve. Big question is still, is the U.S. government going to buy Bitcoin, right? What's your view on that? And can that be done in this kind of budget-neutral way that's been discussed?
Yeah, I think a lot still to be determined on that front. What we have clearly seen is a pretty emphatic signal of support and conviction in this industry, and particularly in Bitcoin and Bitcoin's uniqueness within this category. So whether and on what timeline and how exactly that might be funded, there's a few different sources that they could use to start to accumulate some Bitcoin. I think that's TBD. Obviously, we're watching that. Lots of investors are watching that, but it's certainly not the only source of adoption catalyst in 2025.
And also, I would ask about the administration. There have been some questions between the Trump coin, the reports that the Trump family might be investing in Binance. I mean, I know that you guys in the industry have worked really hard to institutionalize it, to legitimize it. There have been some setbacks, as we know, SBF being a big one. Is this another setback? Do you think that it's at cross purposes of trying to make the industry more palatable to a broader swath of American investors?
I think that what's happened in 2025 in terms of, a little bit of a price correction is more about just things getting perhaps a little bit over exuberant coming into the start of the year. So there's some healthiness in the correction there. Obviously, there was a hack at a major Asian exchange that had an impact on confidence. So that's playing in the market. But what I can say is when we're talking to and I'm talking to some of the most sophisticated long-term Bitcoin accumulators, they're pretty excited about this dip. They see this as a buying opportunity. They certainly don't look at economic headwinds and say that's bad for Bitcoin. They say that's probably a catalyst for Bitcoin.
Well, to be fair, they are always pretty.
That's true. That's true. But some of them, we're taking chips off the table a little bit in the hundreds, and now they see this correction and. A lot of them view it as sort of an irrational sell-off based on short-term factors. I don't know whether that's true or not, but certainly there's a lot yet to be sort of understood and processed about this asset and how people think about it from a risk-return perspective and in a portfolio and how the correlation should play out over the long run. So we're trying to play a role in that. Lots of other financial institutions that have come into this space are trying to bring some quantitative rigor to that as well.
Robbie, always good to see you, especially on set. Thanks for joining us.
Thank you.